Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to a very red bear jumping out the window. April 4th, episode 178 of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the main man of the hour, of the quarter, of the year, AJ Brown. I feel like you might have called this top on one of our, 4 episodes 4 weeks ago.
Yeah, I absolutely did. And we've had those criteria, SIP, that we were looking to have met. Criteria number one was to get a mature trend, which means a minimum of two reversals to the downside, two reversals to the top side. That gives us that maturity, that ability to draw channel lines in order to then predict where tops and bottoms will be in the future. The next question was, is this a sideways channel? Is this a down channel? It definitely wasn't materializing as an up channel. And we've had three ideal moves in the down direction, kind of capped by yesterday and today's price action, right? Last week, we talked about that level of $5,460 on the S&P. Well, yesterday we closed below that. Today we're trading below that. That kind of seals the deal for us with respect to what kind of market we're in.
And I also have seen a stat that the VIX jumped over 40. Is that correct?
Yeah, remember we've always talked about the VIX volatility index. It's a index basically implied volatility of the S&P 500, and we've looked at it on this show in the past, really trying to pay attention to a measurement of how confident do we as investors get versus when we get scared, do we get really scared? And so here's an example. Yeah, it jumped almost all the way up to $46 today. It's back down around $39. But what that means is that people are panicking. That's pure panic right there.
And with the little green arrow there, for anybody that's watching for the first time, that's one of your proprietary indicators. And on last week's episode, I specifically asked you, I said, "Hey AJ, we've got this pullback in the VIX. Are you putting your VIX trade back on?" And
Absolutely.
you said absolutely. You said heck yeah, I am. Um,
Mm.
are you getting out now? Did you expect the 44, the 48 print there?
Yeah, well, our VIX trade blew up as soon as we were, above 23. So we are in Fat City with the VIX trade. We actually jumped in after we called the market yesterday evening. We've been jumping in on just some full on like day trades in the bear direction. We're just jumping on, not with too much of our portfolio SIP, but jumping on and capitalizing on some of this down movement.
And if you want to pull up the S&P real quick, capitalizing on the downward movement, um, we last week you mentioned a bottom. I think it was what 53, 56. What was it?
We talked about a level at 55.20, and then we talked about a level at 54.60. These weren't actual bottom levels. These were levels that if we went below, we'd start thinking of things a little differently than we had been. So as of yesterday, yeah, we're thinking about things a little differently. We're thinking of things in terms of bear production, right? If I go back 2 years, SIP, on my charts, um, it looks like maybe, and I'll get rid of some of my rainbow, as cool as they are. I'm going to get rid of some of my rainbow drawings here. It looks like we've got some support perhaps going to be around 5,200, and the next one after that is at 5,000. That's psychological horizontal level of 5,000. After that, I mean, the bottom is, not until 4,500, 4,400.
And I mean, how quickly can we get down there? Because I'm looking at, this fall, and people are getting scared. People are getting scared
Mhm.
quickly. Uh, even just looking at the last 2 weeks, we haven't had a pullback like this in, I don't know, they were saying, quite some time, like 2000, maybe like the COVID top.
Well, it was the COVID time, but the COVID time kind of that was self-explanatory, right? People didn't want to be around each other because they were going to get really sick. What's the reasoning behind this one? Well, it's kind of, some people are probably going to argue with me, but this is somewhat manufactured. But with that said, I want to just, for all of our trader friends out there, I brought up the 200-day and the 50-day simple moving averages. As we've got a whole bunch of folks on our podcast that look at all sorts of technicals and things like that. But, there's still a bunch, and I'm talking about, a lot of folks who give credibility to what we call death crosses. That's when this 50-day simple moving average, this magenta line, crosses down below the 200-day simple moving average, this blue line. And so that's imminent, right? If I do our little hack, and I know we don't have much time, but I'm going to do our little hack where we take the MACD indicator and we come in here and we just put our two simple moving averages into the configuration. So the fast would be 50, the slow would be 200. And what you do is you change the MACD length to 1 and pick whatever kind of moving average. In our case, you're looking at the simple. So this shows the distance between the 200 and the 50. And you can see that that 50 is coming upon the 200 quite quickly now. It's kind of speeding up. If that happens, a whole bunch of people literally use that death cross sign as a sign to not only sell, but to then short the market. So if that death cross happens, and that hasn't happened for about 3 years now, I expect even more selling to pile on than just this knee jerk selling. I mean, pretty much the only thing that's doing well right now is, you know, gold stocks, anything having to do with some of our precious metals, anything that's a flight to safety, if you will.
And or maybe not so correlated to the international markets. I know
W
last week we
That's
talked
the big
about,
question, right? The big question is what's not correlated to the international markets these days?
well, we talked about Cleveland Cliffs last week as
Yeah.
an example. I did want to bring up, because if like the average consumer on the street were to ask, the question, why is the market down 9-10% in a week? I think the simple answer would be these Liberation Day tariffs. And so this was the list that President Trump came out with that really led, I don't know, this flight to risk in the past week. I just wanted to get your take on the list, and what would you take away from this information? And obviously we'll talk about options on how to protect ourselves. But did anything stand out for you here? Because I think China came back overnight and gave even reciprocals that led to another downfall. So what are your thoughts on the details of these tariffs?
Um, I think that it's the uncertainty, Sip, that's driving businesses crazy, right? I've seen a whole bunch of interviews with CEOs of big companies, big public companies, and their question is what type of tariffs are they? Are they permanent? Are they reciprocal? Are they meant to bring people to the, negotiation table? And it's that confusion because if they were permanent, right, then businesses would react in a certain way. If they're temporary and they're going to get rolled back in a little while, then businesses would act a different way, and the CEOs don't know. So really, I think that's the uncertainty in businesses, which is then translating to the uncertainty in individual investors. As far as the amounts are concerned, they really seem like they're higher, and it almost feels like, a lot of times in negotiating, and I'm not gonna say that I'm the best negotiator, but in negotiating, sometimes you go in to a deal and you put down on the table the most extreme offer, knowing that they'll get peeled back to a certain level. And I feel like that's kind of the play that's here, is that we threw down tariffs that were three or four times what they had to be, knowing that we're going to dial them back, but that they're going to wind up in the long run being higher than they've ever been, if that makes sense.
It kind of like maybe trying to bridge the gap a little bit of what it is with the different countries,
Exactly.
reciprocal one for one.
I
Um,
mean, because like Europe, for instance, on average has a tariff of 3 to 5% against us. And so for us to throw, I forgot what it is, but on average it's something like 20 to 25% on Europe. That's like a tariff that's 3 to 4 times what their tariff is on ours. So it's almost like you want to kind of shock the system. I mean, in real estate, which I've done a couple of deals with over my life, when somebody they always say that the first person who throws down the offer, maybe is the one who's in the weakest position unless you do something crazy, right? And so you go in there and they're like, "Well, what are you willing to spend?" And so my knee-jerk reaction is, "Well, I'd love to spend only $1, but I'm sure that's not going to be." And then that gets the ball rolling, but you come up with something extreme. So I feel like this playbook is extreme, but the question is, and I even hear that a lot of some of the people on Capitol Hill, I'm here in Washington, D.C., they just want to be able to know with maybe a month's notification what type of moves are going to be made, rather than having this one night it's this, one night it's this. And that's what's driving the markets crazy, I think, is just the unpredictability, the uncertainty, and not really knowing what the playbook is.
Yeah. All right. Well, we do know that part of the playbook should be diversifying your portfolio, using some of these alternative investment strategies, using options, using premium selling to protect yourself. And I did have another tweet that I think will be a good segue to our special guest for the day. This is a chart that gold is on the verge of outperforming the S&P over the past decade, specifically gold running up, so far in 2025, having a pretty good run in 2024. And we've got a special guest that's going to come on and give us a little bit of insight on how you can get in on this wave, why this potentially might be happening, and what to expect. So we're going to take a short break here, bring on our special guest, talk about some gold, and get you right in your investment portfolio. So sit tight, folks. We'll be back in a jiffy. If I could find our video. Okay, there you go. We'll be back in a jiffy.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you, along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right, go. All right, AJ. Question for you before we bring the guests on. Were you having any conversations with your team, with the trading trainer community about gold this week? Did that come up at all?
We looked, so, I gotta admit, Sip, that besides, like, for instance, the GLD, or maybe some of these mining companies, I don't know much about how to get my hands on real gold, right? If I really wanted to hedge myself, how do you do that? And so we've talked about doing our usual option trading strategies on our equities, but some folks in my program have been asking, I want to put 10, 20, even 25% of my portfolio into real gold. And I don't have an answer. Well, maybe I do today.
Yeah, well, let's go ahead and ask that question. So, bringing on special guest for today, Brandon Thor of Thor Metal Group. Brandon, thank you for joining us at the AJ Brown Show. Do you have an answer to that question? How does someone get started getting some of those gold bricks in their life?
Yeah,
Is it
I do. Thank you for having me on, guys. And I chuckle when, when I mean somebody, as adept as you are with the markets, AJ, you don't understand this, and that's all by design, by the way. Nobody wants you invested in gold. The government, the banking system, Wall Street, they all want to dissuade you. So that's why there exists this kind of abyss of no readily available education. But basically, if you want to acquire physical gold, then what you're going to do is you're going to do it in two ways. You're either going to take money from a bank account collecting dust. You're going to send a bank wire. We're going to ship you, physical eagles, physical bars. There's about 3 or 4 things that you would even consider acquiring. And then a lot of people are using their IRAs at this point. So they're in securities in their 401k or their IRA. They'd rather own actual physical metal. You can do that through something called a self-directed IRA. It's just a specific legal format that gives you the ability to own hard assets. We'll help you set up one of those, roll over the funds, you acquire the metal, and then the only difference there is you just need to have them stored at Brinks or Delaware while they sit in the IRA system. So those are the 2 ways you do that. I know I went through that pretty quickly, but it just always cracks me up because less than 1% of the investing public is in gold and silver, but everybody knows it's valuable. Everybody knows it's always going to be there, and it's been there since Jesus was walking the earth. Jesus wasn't betrayed by 30 Bitcoin. So I mean, it's a good consistent investment.
Yeah, I gotta tell you, I know about self-directed IRAs. For those people out there, what that is that's an IRA that, the government doesn't actually limit your IRA like you would think when you go to your brokerage and you get yourself an IRA and then they have all these rules. That's actually your broker trying to comply with some of the things out there. But there are companies out there that you can roll your IRA to, and that's what, we're talking about here, that you can then invest your IRA in anything, right? Real estate, gold, and that's you actually help set those up.
Yeah, because look, it was it's not a commonly advertised thing, obviously, because there's not a lot of money to be made in it. It's self-directed, so they can't charge AUM fees or advisory fees, so they're very cost effective. But and just a little background, Ron Paul was actually the one that pushed this through, and because before then you could just do stocks and bonds, and then people wanted to own physical real estate, they wanted to own physical bullion, and so that's what the self-directed is. Just alternative assets. There's a cluster of companies that offer this, custodians. So we'll just help you, walk you through an application with one of those companies. We know who allows the gold ownership, and then roll over the funds, and then you can acquire the metals. And then what they do on their end to allow the gold ownership is they just simply rent space at one of these IRA approved depositories, so their clients have a place to store the metal while it sits in the system.
Now let me ask you this, because I feel like you're like the first person I've come up to with your company. I always feel like it's like shady, like I'm like that movie with Adam Sandler in the diamonds market on LA. I mean, in New York City. Like, how do you make sure this is reputable?
Listen, man, I'm glad you asked that question because again, it goes back to think about what the motivations are in this just the financial sector. All right. You have a banking system that desperately wants your dollars under their control so they can lend them out, fractional banking. You have Wall Street that desperately wants your money so they can trade it and charge you assets under management and all that stuff. So that's their revenue model. Then you have the U.S. government that if you buy gold and silver, it's a referendum against all the reckless money printing and debt accumulation. So here's the deal: it's basically created a situation where nobody wants you invested in metals. So it's not the worst thing that it has that reputation that you just mentioned. And the reason it has that reputation is it's not properly regulated like, stocks, the SEC, you name an asset and there's regulatory agencies. gold doesn't fall under the purview of any one. And so it's kind of the Wild West. Now, that doesn't mean that, look, you're going to get chocolate with gold wrapping when you buy it, but it just means that you just need to do a bit more, due diligence as far as the credibility of the company. But it's funny you say that, because that reputation is totally by design. They love it. And that's also why, whenever someone gets scammed or something bad happens, that's the only thing that ever gets advertised. I think half the Americans don't even know that gold's ripping at an all-time historic high. But they would know that some guy in Maryland got, fake gold bars. So it's really funny the way information is disseminated.
I mean, that's exactly what I'm afraid of, that I would buy these things and then I'd go visit them in the repository or have them shipped to my house and they'd be like lead painted gold or something.
So let me tell you, okay, and this is how I answer this to my clients. Look, Uncle Sam doesn't care about you, but they certainly care about them and their tax money. And, these are tax deferred accounts. And so if you get ripped off, they do, and they're not going to get ripped off. So basically, when you acquire within an IRA, number one, the metal needs to be 99% pure, nothing collectible, nothing that fell off Jolly Roger's pirate ship or something. And when it gets to the depository, it gets x-rayed, ultrasounded. There's a white glove treatment. So it has to pass a series of inspections before it's even allowed in as your inventory. And then once it's in there, then it's fully insured by Lloyd's of London. So in fact, it's a lot more protected, in my opinion, than what you're holding now, in that sense with the insurance, but also in the sense that, I don't know if you remember when 9/11 occurred and the banks and the markets froze for about 3 days. So you couldn't even get at your money. Now, you could own metals in an IRA back then, and you didn't have any lag period, because why would the depositories close? They weren't part of the system. They're not part of the market. So, anybody that wanted to get their hands on metals, they got those distribution requests instantly honored. If you're in the market or you're, with Fidelity or something, then you're just kind of just stuck sweating it out and kind of seeing what comes next. So in a lot of ways, I think it's a lot more liquid, a lot more safe, and, you have a lot more control over it.
Dude, how did you get into it? Like, what's your story?
Yeah, I mean, my story is quite circuitous. I was a professional student. I mean, basically growing up, I knew I was good at one thing. It certainly wasn't, just pushing on doors or opening, the common life stuff. I failed my driving test 5 times, but I was a good student. And so, I went to USC. I went to USC Law School. I went to USC Business School. Became an investment banker. Realized that I didn't really like authority that much, and I didn't really like getting chained to a desk. And then I had an opportunity to be a sports agent, and that was my background. I played baseball, but then I also realized that as much as I liked that you're about 6-7 years of making any decent money. A friend of mine from business school was in hard metals. He was starting a shop. He recruited me to be one of the incepting brokers, and the rest is history. And here's the thing. I had no clue, number one, how lucrative this is, what type of investment, what it does for people. And once I got indoctrinated into it, I mean, it's almost like a religion to me now. I mean, I worship at the altar of this stuff as the only form of true money. And you can probably hear it on the way I talk about it.
Is it only for people in the US, or we've got people on this podcast from all over the world? Is it just for US people?
No, listen, it's international. And we'll be very transparent. We have international clients. What we do is just very, very simply, at the outset of the conversation, before we waste anyone's time, we just kind of make sure, what is the rules of your country for import, export, tariffs, gold, silver, precious metals? Does it make sense? Do you have access to the investment within the confines of your country? And so, like with countries like Canada and some other places, it makes sense. Those investors, they get a good value. Other countries have quite draconian tariffs, and it just doesn't make sense. But yeah, we're certainly open to it. We're not closed border, so to speak.
Speaking of tariffs, are you affected? Sorry about that, Sip. Are you affected by all these new tariffs?
Oh yeah, I mean, look at
everybody across the board.
Yeah, I mean, here's the thing, and by the way, this is something that is counterintuitive, because gold and silver have dipped substantially. Well, substantially for gold and silver, which is like 1%. It's not that type of investment, but it's dipped these last 2 days, and people wonder, well, this is a safe haven. The market's getting crushed. Why is that occurring? So, I don't know. And if people aren't wondering, I'm going to tell them anyways. This is why that's happening. So basically, when you have a significant drop in the market, there's something called a margin call, because most investing takes placed on an institutional level. And when there's a margin call, it doesn't matter how much they love a business or how much they love an investment. They sell anything and everything to pay the piper, right? And so that's why you see these temporary dips, because it's just simply metals are liquid and it's a good way to sell to pay margin. Now, the good thing is that it's almost like getting it on sale, because once that temporary dip subsides, then there's just a fleet of safety, and then you just see the stuff rip. So yeah, but how is it affecting our business? In a terrific way, which we hate to be profiteers on, other people's misfortune. But whenever there's anything bad in the market or, any uncertainty in the world, people run to the one thing that is certain, which is physical metals.
Did you want to ask something, Sip?
Yeah, I was just, and so gold is, like I brought up the initial chart, gold is ripping comparatively to the S&P in that statistic over the last 10 years. And there's a huge flight to quality today, this week. How long do you foresee something like that extending itself? Like, could this just be the beginning, and investors should seriously consider allocating a portion of their portfolio to gold, metals, gold, silver, some sort of combination?
Yeah, listen, that's a terrific question. And it's really dangerous what's going on in the financial services industry, because number one, your financial advisor, despite all the terrific and slick marketing that Fidelity and Vanguard's done, they are not financial doctors. Believe me, when I got my MBA, the valedictorian of the class wasn't sitting next to me saying, "I can't wait to be a retail financial advisor at Edward Jones." I mean, that's not where the brain trust is of the financial industry. But here's the thing, because they're not licensed to sell it, they don't push it, and so you don't get the full picture. You get some cherry picked numbers. And there's a story of two economies: the 80s and 90s in the United States with a growth based economy. We had all the baby boomers in the workforce. We had normalized interest rates. We had a $3 trillion debt ceiling we never went above. We had a pretty much consistent money supply. That's a growth based economy. You want to invest in growth, you invest in the stocks or the companies that make up that growth. All right. So the stock market ripped. Gold didn't do anything for 20 years. Enter 2000, enter 9/11. Now look what's happening. All the baby boomers are retiring. The debt has gone from 3 trillion to 37 trillion and climbing. Normalized interest rates, tried, manipulated, 0% interest rates for over a decade. We quadrupled the money supply the last 4 years. So we are in a debt-based economy. In a debt-based economy, you want to invest in assets that combat against the consequences of debt. So that's why gold has outperformed the equity market the last 10 years. And so using that as your lens, do you think that any of this is going to get better or worse? And in my opinion, it's just going to amplify. I mean, I don't see a way that we handle this debt without paying it back with either nominally valued dollars or defaulting. Both of those things, terrific for metals. Both of those things, horrible for the dollar. I don't see another way. I mean, if somebody has a magic, unicorn that they want to sell me, then I'm open to buying it. But I just don't really see it happening, right? And it's really easy when you understand gold, because there's three things that drive it. It's going to be the power of the dollar, right? If the dollar strengthens, it's going to take less of those strengthened dollars to buy that same ounce of gold. If dollar weakens, it's going to take more of those weakened dollars to buy that same ounce of gold, because you can't print gold, and all the gold ever mined fits in 3 Olympic-sized swimming pools. All right, so that's number one. Number two, when the equity market's volatile, people run to safe havens, metals being the biggest one. And the third is geopolitical uncertainty. When things are uncertain in the world, people run to the one thing that is certain, being gold and silver. So that's the three-pronged test. So you can answer your own question. I mean, do you think we're going to be holding hands and singing Kumbaya coming forward, or do you think we're going to have a tumultuous next couple of years here? If you think the latter, then metals are probably a good bet.
Why would I do GLD? Why would I do real gold over GLD, over the ETF?
So, AJ, that's a good question as well. And the way I answer it is, I mean, do you want shelter, or do you want to know the forecast? Because that's the difference. Right? Basically, you got the physical asset, or you got just exposure to the price. GLD is a highly leveraged fund. It's owned by HSBC Bank. It's an ETF, means exchange traded fund. It has a management, people are working on that fund. I believe their expense ratio is 0.4. So anyways, and that's not a one-time thing. That's continuous. So it all depends on what your goal is. If you are trading in and out of the gold market fluidly, if you're waiting for gold to pop 8% and you're going to get out, then GLD is a great trading mechanism. But if you have a chunk of money that you just want to house in physical metals for the next 2, 3, 5 years and beyond, there's just no counter argument from the fact that, hey, there's no counterparty risk. You're not worried about HSBC Bank or, how much metals they're holding or anything. You actually have access and control of the asset, to the fact that, guess what? With those expense ratios that are continuously taken out, if you look at the last 5 years in GLD and the last 5 years, just even with the spot price of gold, the spot price of gold has outperformed GLD by almost 20%. All right. We're talking the spot price of gold is up close to 100% and GLD is up 79.7%. So just from a performance standpoint, you're going to do better with physical as well. So, performance, and then the Mad Max fear mongering arguments, obviously, which is, hey, you want the physical ownership, but those are the reasons why you'd want that as opposed to, GLD.
Makes sense.
Awesome, Brandon. One final question to wrap things up. If I was an investor and let's just say, I had, $100,000 to work with, what are kind of the increments that you advise people? Like how can I get started? What is it, a 5,000 minimum? Is it a 10th? Like, what are you kind of recommending for people that might have a variety of investment portfolios in, what is the low? I mean, I guess there's no high cap, but where do you kind of find the average consumers that might be interested in getting involved here?
I mean, our look at. I'm going to give you an answer that's just not going to satisfy you, just by nature. But our low end, our floor is kind of about a $50,000 investment. Not to say that we wouldn't take less, but it all depends. If someone's trying to buy a couple coins for a Christmas gift, we're not the right place for them. If they're just uncomfortable with the investment and they want maybe to buy a couple coins just as a test trade, we'll accommodate that. We're very flexible as far as someone just sharing what they want to do and what their goals are, and trying to accommodate them as best as possible. But you're really looking at what you have out there and what you want to protect. And the analysis you should use is, okay, so if I have $1 million, just that's my financial portfolio, and I have 600,000 in securities, 150,000 in bonds, and whatever in money market. Okay. I mean, you look through all those parts of the portfolio and then you think, okay, would physical metals be superior to that? And the one thing I would advise against is do not use these stupid modern portfolio theories. You should have, 5%, 10%. I mean, because number one, those were created in 1992 when we had, again, normalized interest rates, a robust growth-based economy. It's not the case anymore. It's an equivalent of packing for a trip with a normal climate versus packing for a trip to Antarctica. Not going to waste any part of the suitcase, with swimming trunks. But as long as you're kind of looking at every part of that and understanding it, and then figuring out that gold is money. I mean, it looks like an investment because it's internally valued, but it's actually money. And so if you understand it that way, then you look at it in two ways. Okay, is it going to be better than my securities? But more importantly, is it going to be better than these loans backed by the United States government that I'm holding, quote unquote, as my risk-free investment? Because that's what the dollar is. I mean, and they don't make any bones about it. If you pull a dollar out, it says federal note. A note's a loan, and it's backed by the full faith and credit of a $37 trillion debtor. So you put it in those words, what would you rather have? You want loans backed by a $37 trillion debtor, or you want, something that's been around since the Bible?
And a lot of people are pointing to these tariffs and, as a way to tackle this debt. But Brandon, I feel like we could talk for a while, but we got to keep the party rolling. Thank you for your time. Once again, head on over to thormetalsgroup.com if you want to learn a little bit more. And Thor World on IG. Brandon's got a pretty hopping Instagram up there with 150,000 people following him. So good stuff.
I can see
Brandon.
why, Sip. I can see why.
Well, he's like a Southern California athlete.
He's the man.
Brandon,
is there any last things, Brandon, that you think some active investors, some traders should know?
Yeah, I mean, the last things would be and this probably goes against my motivations at times, because obviously I want to sell gold and as much as possible. But you need to make sure you're putting the right money into it. If you're a trader and you're good at it and you're moving that money, then it's not a good candidate. Keep that money liquid and do your thing. I mean, that's what you're an expert at, or that's what you're good at. Gold and silver are just a good candidate for money that you don't see theoretically that you're going to need liquid for at least like the next year, 2 years, something like that. So as long as you understand that maxim, then you can't go wrong. You give yourself enough runway. I don't think that you really have any risk, but I know it's probably irresponsible to say, but I'd say that's number one. And number two is, look at, because of the fact that they do not want you investing in it, because two multi-trillion-dollar industries and a powerful government does not want you investing in gold and silver, they've created a situation where it is like the Wild West. Not to say there's not a lot of legitimate companies, because there are very legitimate companies, but just be very, very careful with who you use, and just listen to the logic. Like if we walk you through an education, you're going to understand, okay, that makes sense. I've heard of that metal. I get it. All right, I can see that value. If somebody's trying to sell you a three-toed dolphin special edition coin and you're paying $1,400 a quarter ounce, you should be kind of thinking, wait a second, there's something off here in my gut. So as long as you're just using logic, you're not going to get thrown off the path, and just don't let it intimidate you, because I know there's a lot of different metals, different names and stuff, but as long as you stay on that path, get good education, then you can make a confident investment, and I'm sure you'll be very thankful you did in the next couple of years.
And as you mentioned prior to the show, you put your name on the label, Thor Metals Group, right? You
Yeah.
put your reputation on the line to make sure that your clients are happy. So that is very nice to see. So Brandon, thank you very much for your time today. Thank you for hopping on, educating us a little bit about gold. As I mentioned, if anyone has any more or wants any more information on getting involved, send us a DM, head on over to the site. If you head on over, let Brandon know that you got the info from the show, from AJ Brown, from the trading trainer community. And we'll be keeping an eye on gold moving forward.
And so, by the way, just real quick, I'll give them a little teaser. If they do let me know that they came from your show, number one, I'm happy to speak with them personally, because shockingly enough, I do have the time to engage. I love teaching about this stuff, and I'll give them 2%, off of whatever they get. So if they're buying 200,000 in gold, they'll get 4,000 free in metals. So,
wow.
I'm not going to put another wing on their house, but hey, it's not meaningless. So
do I qualify for that?
Oh, Jesus. Yeah, you do as well, I'm sure.
Oh, awesome.
But by the way, let me just give you an 800 number too. So 866-944-THOR. So that's our direct number. If you wanted to call, you're going to get one of our brokers. You can ask for me by name, and if I'm not busy, I'm happy to take the call. So 866-944-THOR, or you can go to our website, thormetalsgroup.com.
thormetalsgroup.com. Awesome.
Thank you, Brandon. Appreciate the time. Hope you, get some more business today as the market continues to crash. Otherwise, enjoy the weekend. Have a safe weekend, and we'll catch you on the internet. Yeah.
Thanks, guys. I really appreciate being on. This was fun, and hopefully we can do it again.
Thanks, man.
All right. Take care.
Awesome. Okay, AJ, market's continuing to fall, but the people want to know, do we have some opportunities? Do we have something that we can get into? So your pick of the week, I believe, is falling into the commodities sector.
Well, oil, yeah.
Let's go ahead and pull up what you're liking this week, and that's, see if I pronounce this correct, Petróleo Brasileiro, ticker symbol PBR.
Yeah, Brazil Petroleum is kind of what or we just call it PBR. I've always loved this for premium selling. So I'm going to be straightforward with you guys. I am totally, in front of the screens over the last 3 days, doing some, long put trading, making some quick bucks here and there. I've got about 20% of my portfolio on the line, capitalizing, making a year's worth of income on kind of the down trade of the market, but I still want to have those long-term plays. And so Brazil Petroleum, I've had this one creating income for me for years. And, just like everything, it's dropping, but it's got a floor there, and I'm watching that floor around $12.50, maybe as low as $12. I'm looking for a good signal, a good arrow. If you've downloaded my indicators, you'll get yourself a good arrow. And this would be a place where I wouldn't have any problems at all buying some of this Brazil petroleum stock. I wouldn't worry about a back month option. Brazil Petroleum doesn't have good back month options, but this is inexpensive enough that you could buy, 100 shares or, 200 shares, buy them in lots of 100. And then every time it gets up around 14 bucks, sell your premium, buy your protection, turn this into an income generator, even when the markets are sad. So this one, I traded this one all through the pandemic, and it's coming back around as one of those ones that's on my favorite list.
Awesome. Do we want to look? I feel like we should pull up Cleveland Cliffs real quick because I
Sure.
did like that. I did like that setup from last week.
Yeah. Cleveland Cliffs, it didn't ever give us that follow through that we wanted to, and it's following that market. But for our candlestick, technicians out there, you might be familiar with this type of top end doji, or I call it an upside down Lincoln's hat. This usually signifies that we're getting towards the bottom. So this might be an opportunity for you to buy Cleveland Cliffs even lower than what we were talking about last week. I would have no problems once this whole thing has stabilized getting into some of these commodities that, especially around the energy sector, no matter what, we're all going to still need energy.
Yeah, and fortunately, we've been able to develop a lot of it on our own. So that's good to see.
We got to watch out, though. I have to say, we have to watch out. I think right now the U.S. is producing something around 13 to 15 billion barrels a day, or is it million barrels per day? And, we use something like 20 or 21. So our partners to the north have been that source of that additional oil. And I kind of worry, I already see the gas prices creeping up at the pump. Um, you know, it makes me think, Sip, do you remember that band Destiny's Child? Beyonce's before Beyonce became a solo artist.
Yeah, fortunately, that is my era.
And they had I just remember that they were managed by Beyonce's dad. And I remember when a couple of the other artists in that group were getting kind of upset. They thought that maybe the dad wasn't giving them as much focus as Beyonce. And so they started to kind of negotiate and like hold out, thinking, hey, we're young and we're, as equal parts of the band, and they can't go on without us. And it wound up leading to, Beyonce and her father realizing that, you know, she could do things better on her own. I think, if I had the ears of some of the folks, especially after listening to Brandon and kind of putting it out there, about, the US is kind of an interesting, it's got this great name behind its currency, but if you dig down deep, it's also got $37 trillion in debt. So, when you start tossing your weight around, I start thinking about Destiny's Child. These other players, I already they've publicly said that it ain't happening, but you already hear that China, Japan, and Korea for the first time are talking to each other, right? And you're talking to, like, Canada figuring out how to work with Europe instead of the US. This whole thing where we think our, here in the States that we can just throw our weight around, people are gonna, kinda get hurt by that and find other players to go play with, and they're gonna realize that they're good enough on their own. So, if I had the powers that be and I could bend their ear, I'd say, we ought to not think that our poop smells like roses. I don't know if that makes sense, but it kind of worries me a little bit.
Yeah, and that's why you put on the VIX trade. That's why you have these different strategies to protect yourself, to make a buck on the way down while everyone's jumping out the window. We're still sitting,
Very pretty. I
following your rules, your risk
I should
management.
totally qualify that and say I'm not worried about me or my family because I know how to play down markets. I'm worried just for the US in general. I'm fine.
Well, the folks, AJ, want to know your thoughts on some specific names.
Yep.
And I feel like some of these are either going to tank or going to rip simply because of their being affected by what's going on geopolitically at the moment. And so let's get the party started with our speed round with Chrissy from Laramie, Wyoming. She wants to know, AJ, what's going on in this tech sector, eBay? Are they going to be affected? Ticker symbol EBAY.
Is eBay even considered a tech sector company anymore? I mean, you go to their website and you wonder how new their tech really is. I wonder if just
All right.
consider
Well, it looks like I'm losing
that
AJ. Let me see if I take him out and bring him back in, if that helps. All right, AJ. Lost you there. Lost you there on the stream. I can't really give any commentary on eBay myself. So let me go ahead and once again pull up AJ's quick links to see if AJ's audio and visual gets synced up here. Um, yeah, AJ's quick links. So if you guys want to get a little bit of a deeper dive into Trading Trainer and the program, head on over to our quick links. I'm going to go ahead and throw this in the chat. Also, let me go ahead and throw the Thor Metals group in the chat as well. It looks like AJ's out the mix there, not coming back anytime soon. Here's Thor Metals group. Thor Metals Group if you want to learn a little bit more. And like Brandon said, mention that you found us on the AJ Brown Show. But we're getting close here to the end of our episode. We did have two more in our speed round that we may need to get some additional commentary from AJ following up. I don't see. It doesn't look like he's looks like we might be having a camera error there. So I don't want to waste any of your guys' time waiting on AJ to get back. Apologies for the technical difficulties. Once again, big thank you to our special guest for today, Brandon Thor of Thor's Metal Group. A lot of good stuff happening in gold right now. If you're looking to get involved, he is a great resource. And like he said, he will take some time to talk to you if you're serious about making the move. So thank you once again, Brandon. Thank you to AJ for spending some time with us this morning, getting us queued up with this market rally. Maybe his computer is just catching on fire because the markets are moving so fast today. As always, head on over to let's go ahead and pull this back up. Head on over to the quick links page. This has got all the socials. We've got the free indicator suite. We've got the different socials, a free daily workshop that AJ puts together. Well, it runs every day, but it breaks down some of these basic option strategies, learning more about Trading Trainer as a program. We've got custom one-on-one coaching. So a lot of good stuff. Head on over to those quick links page. Show some love. If you have some questions on any of the things that we talked about, please feel free to drop a comment, send us a DM. We do appreciate it. I'm still having some issues with AJ's camera, so I'm gonna go ahead and wrap it up on our end. Appreciate everybody's time. We'll catch you next week. We're gonna get this resolved. Stay safe, everyone. Stay safe in these markets, and be sure to manage your risk appropriately.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.